The longest shutdown in US history is about to end, and stocks are moving big because of it. Today, we talk about the latest shutdown updates, what it means for the stock market, and what to keep on your radar. It's an exciting time to be a trader.
Wow, the SPY flipped today and gapped up this morning as rumors of the government opening are making shockwaves in the stock market. Yes, I could not believe it, Mike. US stocks ended higher and the Mag 7 actually had their biggest jump since May. That is one of the craziest things to say right now. Of course, the market has been jumping a lot this year, but nonetheless, that is insane considering the environment that we've been in lately. But here's what's really going on. So the government shutdown looks to be on track to end this week, and here are some of the remaining facts that need to be said. So yesterday, the Senate actually passed a procedural motion, and this basically gives the green light to go ahead with the actual funding legislation. Now the Senate actually still has to work this out and still do another vote to formally pass the bill. Then once they end up passing it, then the House votes, and then ultimately Trump will have to sign it. Trump did say that he backs this bill today, but nonetheless, it still has some very key hurdles to get through before the government shutdown does effectively end. And Mike, whenever we talk about the shutdown ending and all of the implications, Kalshi's pricing in that the shutdown's now lasting 43.3 days, so about 2 to 2.5 more days from where we are at this current point. Ultimately, stocks are in this buy the rumor type of mode right now ahead of the shutdown ending. I'm curious what will happen, though, as the events shake out.
Oh yeah, we're definitely seeing some big volatility from this, and a lot of that is going to gold. Gold really popped higher today as the U.S. government nears a deal to reopen, and what essentially is happening is, when the government is shut down, many federal programs are paused or just slowed down. Agencies furlough workers, delay contracts, and do a whole bunch of stuff like that, which means at least less spending temporarily. But once the shutdown ends, all of those delayed payments come due. Workers get back pay. Agencies restart contracts. Spending resumes. And when the U.S. government reopens, there's often a short-term surge in spending. But the U.S. government doesn't actually have much cash on hand. It's constantly borrowing money and issuing treasury bonds. So every time spending exceeds tax revenue, the difference just keeps adding to the national debt. We're getting closer and closer to that $40 trillion mark, and it looks like investors are hedging themselves a little bit by buying up gold as a safe haven.
Yeah, definitely. And, we saw GLD pop back up today, a nice 2.7% jump. I was actually looking at the gold miner ETF GDX. It was up 4.7%, and SLV had a really nice gap up today, too, at 4.26%. So we're definitely seeing a lot of these assets start to come back here, and a lot of people are asking, is this a buy the dip scenario for gold and silver? And gold and silver are starting to jump back, and I'm looking at this as a very realistic scenario. I mean, there's a lot going on right now with the government reopening, and I mean, whenever we talk about some of the weird things that could help add to some of these costs in the national debt, Trump's even talking about bonuses of $10,000 per person for all the air traffic controllers who ended up staying at their jobs, and there might be other things like that that end up just adding more to that overall national debt. But Mike, whenever we look at, let's just say, the market overall right now and gold and silver, a lot of people are wondering if it's time to buy the dip, and it's having me ask that same question as well, and nobody wants to get left behind, right?
Exactly. So in a longer term sense, gold has been a safe haven, and it has been especially crushing it over this past year. I think in a very long term sense, I don't think it's ever a bad time to add more gold and silver. In a short term sense, it also has a lot of momentum too. So I do think it is worth keeping on the radar, especially throughout this week, and given how much momentum it still has from what we've seen so far into this year. Tom, when we look at the charts, let's say on GLD, are there any specific levels that stand out to you for tomorrow, both in terms of resistance and support?
So whenever I zoom out on GLD a little bit over the past few weeks, there is a very clear resistance point coming up close to 380 to 381. And I'm actually going to say that this is a $1 resistance zone because there's been a bunch of different hits there over the past few weeks. And if we could end up breaking up and through that zone, I could see GLD running up to possibly test 390 plus over the next couple trading days, where I think we could see even more resistance. And there's always going to be a handful of smaller levels mixed in, but that is the main level that I'm watching for. And as far as a good area of support actually for tomorrow, I really do like how GLD had been bouncing and holding that 369 to 370 range recently. So that'll be what I really use for support. And that'll also be where GLD will fill the gap. And this morning we had a big gap up on GLD as gold futures popped off last night. So I'll be watching for that gap to possibly fill if there is a pullback.
Yep, so let's keep gold close on watch. It's definitely in play now, but even when we look at the overall market or SPY, it's also getting a good boost from this government shutdown set to end, because now that the government is set to reopen, spending will start back up again and cash will flood back into the economy, and that is short-term bullish for earnings, demand, and growth stocks. Even if it's on borrowed money, markets really just care about the short-term effect of it. So, it's good for the markets in the short term. And let's also not forget that, like we've been showing quite a bit over lately, historically speaking, the market has done pretty well once government shutdowns end.
Yeah, like during the shutdown, the markets are kind of a coin flip, going green only 54% of the time. But once they end, 1 year later, markets end up going green 86.4% of the time and popping up on average 12.7 and 12.3% respectively at the average and median there. Whenever I talk about this, Mike, I mean, this data is pretty surprising to me. Again, the market does go up generally as we go forward, but to see it be 86% is a pretty nice number there, especially with all the volatility. Just keep in mind that every single year could be different. But Mike, whenever we look at like the market in the short term today, I love the way it gapped up. And whenever we gapped up, we actually started to break above one of the bigger downtrends that we've been on lately. Yes, we've been following this downtrend over the past few weeks, and the SPY has been continually bouncing off of this range and rejecting to the downside. Well, today, the SPY actually gapped up and held above that trend line today. We did not fall down and fill the gap. Instead, we held the trend and continued higher. That's actually a really bullish sign in the short term. It doesn't mean that tomorrow has to go green, but for the next few days, that's definitely something that I'm keeping in the back of my mind. And something else that we did is last week, there was this big zone between 674 and 680. And with all the volatility today, SPY ended up ripping above the upper end of that zone at 680. Again, another really bullish sign in the short term. So I'm definitely watching those levels for tomorrow, Mike. There's that bottom end of that range still at 674, but there's even some levels from today closer to 679 to 680 that will still be pretty critical supports for the next few days. If the SPY does pop, I really love targeting this upper range closer to 686 to 688 for the next few days. But the main thing is that SPY has been very volatile lately, and we've seen a lot of downside action.
Oh yeah, which is why it's so important to stay adaptable. But I will say one thing that is really working for the market is that it has a lot of momentum this year, and we can see that historically speaking, whenever the S&P 500 is up more than 10% through October, it tends to be a really good sign for the market. Over the past 14 years, November ended up higher 13 of those years, and we can see historically speaking, in situations like this one, the market ends up higher in November 85.7% of the time, which is much better compared to like the normal return of 69% of the time. And the average returns are pretty strong as well, coming in around 3% compared to like the normal average returns of around 1.9%. So no complaints there.
Definitely not. And even December, the stats are pretty solid as well. They don't necessarily beat the averages by a ton, but still, 76% versus 73% is still great. And then whenever we see the last 2 months readings coming in at 90.5% versus a 77.3% reading on average, I mean, that is definitely a really good sign. Of course, November being the bigger of the two, but yes, a lot of people have been looking at these last couple months as being a final cap to this rally at the end of the year. We've been seeing stocks perform extremely well, and as we go into November and December, we could see that continuation come through, as this is a generally bullish time of the year.
Definitely. And then looking at the lineup for the week, tomorrow is Veterans Day. Bond markets, banks, and government offices will be closed, but the stock market's open, which is great. Tom, what is the economic schedule looking like, as well as earnings?
Yeah, as everybody knows, we've been waiting to see if any economic data is going to be released this week regarding the inflation data. And as we can see, there are no dates listed or times for Thursday with that data release. And one of the big things is there's going to be a big delay whenever the data does start to be released. So we can actually see that there are some estimates here, depending on when the government reopens and when the data will come out. One of the biggest things people are looking at is the employment data for October that was scheduled to come out October 3rd. But as we can see here, at the November 10th reopening, they are now looking at November 12th as the date released there, or November 19th if it opened on the 17th, or if it opened on the 24th, it would come out on the 26th. Just keep in mind that there will be a lot of data releasing if the government does reopen this week. So keep that in mind, and the data will be coming a couple days after the opening. But we will also be seeing an ADP employment change data released this week, tomorrow at 8:15 a.m. Eastern Time, 1 hour and 15 minutes before the market opens. Besides that, we do have a pretty wide and action-packed earnings lineup, Mike. Rigetti and CoreWeave reported tonight. And then tomorrow, in the next few days, we have a lot of growth stocks reporting. Even some like the metals company that have been pretty popular recently are going to be reporting.
It's a fun time to be a trader. Awesome. All right, well, let's get right to some setups and predictions then. A stock that is still on my radar is Enphase and is to the upside. I know we mentioned this one in some videos recently. The stock is pretty oversold. It is getting some very good momentum, and their CEO recently bought 10,000 more shares of stock, which is good. It closed up today by just under 9%. Ticker symbol SEDG reported positive earnings and fueled a lot of positive momentum with solar stocks in general right now, which I think makes the bull case for Enphase even stronger. Enphase is definitely on my bullish radar for a potential continuation to the upside over the coming weeks. I would not be surprised if it continued to move higher this week, but in the worst case scenario, I think it could have opportunity going out like even 2 to 3 weeks as well. Either way, Enphase is definitely on my radar, and I really like to see momentum building like it is.
Yeah, an 8.67% move is definitely awesome for Enphase. Their average percent rise is 2.7%. And I do got to say, they've had a lot of wild candles recently. And the last time that they started bouncing up off of this zone, Enphase ended up moving from around $30 all the way up to around $41.30. That's like a 38% jump right there. I'm not saying it's going to do that again, but again, over the next few weeks, I will watch it as well, Mike, as there is some hype coming into the solar industry again. But with my first setup, I'm looking at Snapchat for an upside move here as well. Snapchat recently had a nice gap up with earnings, and then over the past couple trading days, they continued to power higher. One of the biggest levels that I'll be watching over the next few days is $9 per share. If we actually go to the Bookmap, we can see that today there was like 200,000 shares at that $9 point, just over it. So keep your eyes on $9. If we end up breaking past that over the next few trading days, I will be watching for a much larger move to happen with Snapchat. I feel like that the stock is pretty beaten down overall the more that you zoom out, and it is holding this base and support range very well here.
Sounds good. Another stock that is close on watch is SNDK. This is SanDisk, and this company has been going absolutely insane over these past few months. Basically, since September, this stock is up like 430%. It has been one of the craziest moving stocks in the market, and yes, it is completely crushing it, but this trend is also very out of balance. Today alone, it moved up by 12%, and while you have to be extremely careful trying to short moves like this one, it is definitely on my radar, but again, when trying to short moves like this, you have to be careful because there's no telling exactly when the trend will end. this stock will be on my radar. And as the stock starts to weaken, as more selling pressure starts to come in, as investors start to unload their shares, I think there will be a good opportunity shorting this move and capitalizing off of the pullback. It's a very volatile stock, and I think it's one to definitely keep on the radar over these next couple of days, and honestly over these next couple of weeks and months as well, given how much it's moving, and it's an exciting one.
Even if we just go to the end of October up to where it is now, this stock had almost a 35% jump. That is a crazy move for any stock out there, but SNDK has been very explosive here. I will definitely be watching for more of a slowdown as well, and it's never bad to maybe look for a bit of confirmation first either, kind of like you were saying there. With my next play, I'm looking at Tilray, and I'm really looking for a good gap fill on the daily chart. So Tilray ended up filling the gap recently, and if we do end up seeing the gap fill play out in an awesome way, we might see a good continuation to the upside here. So Tilray is holding support close to the 115 to 120 zone, and like I said, if we do see a real turnaround, I could see Tilray really starting to recover because there's been a lot of hype with the MJ sector over the course of this year. And once we get some of this legislation out of the way, especially with the government shutdown news, maybe they will start focusing on MJ a little bit closer once again. So I'll be watching this for a possible move higher here. Of course, there could be any situation with MJ that could make them drop, as if let's say legislation ends up falling through or something of that nature, maybe something bad or negative thrown into the shutdown bills too. There could be situations like that, but these stocks are in play right now on support. They are a bit risky, but with high risk can come high reward.
Yep, so we shall see. And besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have SoFi, ticker symbol SOFI, to the upside.
One of my favorite growth stocks in the short term. They've been all over the place lately. If they pop up above $31, then watch for a continuation.
All right, with the next one, we have Micron, ticker symbol MU, to the upside.
Yeah, Micron had a nice pop today, 6.46%, one of the better chip stocks. If they can break above 257.15, just at their double top there and high of day, then watch them up as well.
And then with the last one, we have NewScale Power Corp, ticker symbol SMR, to the downside.
I noticed a lot of growth stocks recovering back today. Some didn't, of course, and SMR was one of those. If they end up breaking down below 27.50, just under their low of the day, then watch them to the downside.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through at the levels listed. These stocks are volatile, so make sure to protect yourself. Whether you trade one of these three stocks or anything else, focus on making smart, long-term oriented, disciplined trading decisions. And if you need help with that, check out the Key Lessons channel in the StockedUp Discord. It is completely free. And let's jump right into today's $397,000 big money trade, and we are looking at ticker symbol SNY. Sanofi is a French pharmaceutical and healthcare company, and the trader here bought the $42.50 strike call options that expire on March 20th of 2026. This stock had a good day today. These call options are deep in the money, and they have a fair amount of time to them, so the trader here is definitely opting for the trade-off of basically making this position relatively easy to make money on compared to as if it was an out-of-the-money call trade that had less time to it. We can see Sanofi over the years has done well, but it is also a relatively stable and somewhat slow-moving company, so it's probably not going to see any giant jumps like that recent GMED big money trade. But looking at the setup, I definitely think it's interesting. At the same time, I don't think it's the craziest trade we've ever seen.
Yeah, I mean, it's going to be one of those trades that will probably be pretty easy to manage. Like you said, having quite a bit of time out to March 20th of 2026, you could maybe almost set it and forget it with this setup as well for a couple of months as we head into the next year. And with a lot of the, I would just say, like pharmaceutical stocks. You can definitely see a lot of craziness out there. And I will say, like, when I think about this stock, Mike, it does have these periods where we will see it actually gap up and continue to gap up in a pretty good way for multiple weeks, sometimes even months at a time, like it did at the very beginning of the year this year, whenever it jumped up into the middle of March. But whenever I think about this stock, you know, it's a stock in play. It's bouncing off support. And if we do start to break through this recent resistance range close to $50 to $52, I think the stock could shoot up quite a bit more, and it gives me confidence that the trader's going in the money as well. This means it would be a lot less advantageous for them to short this off the bat. Like you said, Mike, if it gets a little risky sometimes, if you're talking about a big money trade, and let's say this was the 55 strike or the 59 or 60 strike, I'd be pretty worried. But with SNY, with it this far in the money, it at least gives you that extra like added confidence at least.
Definitely. So let's keep it close on watch. And if you are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single day we cover big money trades just like this one, the most important news, information, chart setups, historical stats, upcoming events, and basically everything you need to know about the stock market. If you subscribe, you'll get our videos recommended to you more often. And let's also give a giant shout out to today's member of the day, Phoenix757 in the StockedUp Discord, who had a beautiful day with some GLD call options. So this was great to see. Huge shout out to you, Phoenix. Keep up the great work going forward. And if you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get full access to the StockedUp trading floor. Not only do you get full access to our army of custom trading bots, but one thing that's really cool and pretty useful is that with all of these big money trades, you can actively see which ones are performing the strongest. We can see Tom typing on the screen right here, /BMP strongest, and we can instantly see the list of the best performing setups. For example, the GLW call options are up by a little bit over 1,200%. The GMED call options up by 765%. The Lift call options up by 478%. The BABA call options up by 455%. And the list goes on and on and on. Basically, you can access much more useful insights, not only with the big money trades, but everything else we have in the trading floor as well. We have weekly live events. You can chat with Tom and myself all day long and do so much more. It is the place to be if you're into short-term trading, and yeah, it's definitely been an exciting ride lately. Check out code BIGMONEY to get access to a great deal for the yearly plan. The link for that will be in the description in the comments down below. But besides that, we are set for a very exciting rest of the week. This government shutdown, you could say, ending should add in some nice volatility, as we've already seen. And it'll be exciting to see some of this economic data that's been hidden from us over these past couple of weeks. Thank you all so much for watching, and let's crush it in the market tomorrow.